But before we get started on credit repair, I would like to give you our little commercial about SCORE. SCORE's mission is to foster vibrant small business communities. We do this through mentoring and education. And we hope that you as a small business owner get all the support that you need to be successful. We know certainly that small business drives our national economy. Over 70 or 95% of businesses are small businesses. So they are absolutely critical to the success of our economy. We do have in the Cleveland office approximately 100 volunteers, and across the country in the neighborhood of 10,000 who give their time and their energy and their knowledge to share with you. We are the largest network of free volunteer small business mentors. So no matter what stage your business is, we have somebody who can help you. If you go to our website, you can easily request a mentor. Again, any stage of your business, if we don't have somebody in Cleveland who has the expertise to help you, there are 10,000 volunteers across the United States, and we can contact one of those to help you. So distribution, as you see, anywhere in the United States, we are able to find a mentor to help you. These are some statistics for the last fiscal year. SCORE helped almost over 30,000 businesses get started, and additional non-owner jobs as well as total jobs created. So we're pretty proud of that. We think that with your help, we are being successful. Obviously, we're not successful unless you're successful. We have entrepreneurs from all walks of life. About 10% of our entrepreneurs are veterans, and in the neighborhood of 60% of our entrepreneurs are women. So we're very pleased with that. Each of our mentors signs a code of ethics. So protecting your information is a top priority for us. Volunteers are not allowed to use your information to make money or to use it for any other purposes. So it's protected by the government. This is a snapshot of our website. You can go here and sign up for a local mentor. You can look at what webinars are coming up and also see what's available as a recorded webinar that you can view at your leisure. There are lots of other resources such as financial templates, business plan templates, articles, blogs, etc. So when you have time, go to our website and just look at all the resources available. So our services are free. Part of our efforts are supported by the Small Business Administration, but we also get a significant amount of support from local businesses that want to support the growth of small businesses in the community. Here's a QR code that takes you to our website or a link. Okay, so we're going to talk about credit repair. If you have any questions, would you please put them in the Q&A so that I can see them more readily? I'd really appreciate that. So why do you need credit repair and how are you going to do it? So credit repair is basically fixing your bad credit. If your credit score is low and you have problems with getting loans and so forth, maybe you ought to think about repairing your credit. It's also challenging and disputing the errors on your credit report. So you should be checking your credit report periodically to make sure that there are no errors. What is the impact of bad credit? Well, you're going to find it difficult to get loans, and many banks and other lenders require a minimum credit score over maybe 650, some in the 700s. So it's important to, again, monitor your score. It also means that if you have a low score, you may not qualify for credit cards. And even if you do, you're going to have to pay a higher interest rate than those who have a better credit score. Even your car insurance premiums and other insurance premiums will be higher because they consider you more of a risk if your credit score is low. And it may even impact on your job applications. Would you please comment that you can see the slides? I see someone in the comments says that they're not seeing the slides. Okay, you can see them fine. Thank you. Okay. So what is a credit score? Again, there are systems, usually FICO is the primary one, that they assign a number. And it's used by all of your financial providers to evaluate your credit worthiness. So if you have an excellent score, it will be over 750. And that's 30% of people, which is pretty impressive. Good, 13%, fair, 18%, and poor, between 550 and 649, 34% of people, and even 16% bad. And there could be all reasons for why your credit score may be bad. So it's not something to be embarrassed by. It's something to work at improving. So 1 in 5 consumers have an error on at least one of their credit reports. So again, it's important to check your credit report to make sure that there are not errors. And you can go to annualcreditreport.com and get free copies from TransUnion, Equifax, and Experian, which are the 3 major credit reporting agencies. Again, and don't get caught by one of those agencies that give you a credit report but charge you for it, because you can get them free through this link. So how do they evaluate your credit score? A lot of it is how frequently you pay late. So it's important to pay on time. Do you go to collections? So even a lot of times you'll get issues with hospital bills and so forth. It's important, if they send you to collection, that you make sure that they ultimately correct that. Of course, if you have a bankruptcy, that has a major impact. If you have a foreclosure, that's also a major impact. So let me just check this. Is there a financial projections template for a service business on SCORE's website? The financial projections actually can be used for any business, whether it's a product or a service. It's just work with a mentor and they can show you how to use it. Again, history of debt repayment is about 35%. Your ability to repay your current debts and your capacity to manage additional debts. So if your current balance say you have a credit limit of $10,000. If you're using more than 3,000, that would count against you. If you have credit that's aging for 60, 90, 120 days, that also has an impact. Your credit mix, things like credit cards, mortgage, loans, that kind of mix will have an impact. And then if you are applying for a lot of different credit situations, that has an impact on your score as well. So all of those things go into the calculation. So again, you want not to have any late payments. You shouldn't be maxing out your credit cards. You know, it's important to try to pay each month as much as you can, ultimately and ideally, pay off your credit card at the end of the month. If you have a short credit history, like my granddaughter, for instance, who's in college, doesn't have any credit history because she's never had a credit card. So one of the things you can do, of course, is have a credit card that has a guarantee on it. Or if you only have one type of credit, so maybe you only have a mortgage, or maybe you only have credit cards, or maybe you only have a loan. So it's good to have a mixture in order to have a robust credit score. And also, again, if you have too many applications for credit, it becomes a problem. So let me see if there, okay. Okay, from a legal perspective, your credit reports have to be 100% accurate. They have to be fair. And if they have something on your credit report that is negative, they're required to provide you the backup to show why it's there. So again, if you have a problem, you want to contact the credit bureau and file a formal dispute. Now they're going to require a lot of documentation from you for using your disputing the error, for instance. And if you have more than one error, each one has to be done separately. And it does take a considerable amount of time. So some people opt to hire a credit repair company. Again, they'll do the work, but you still have to provide the documentation. So depending on your situation, if you have the time, it's better to just try to go ahead and do it yourself. So if you want to consolidate your credit card debt, which is really sometimes a good idea, if you have many different credit cards or loans and so forth, you can consolidate your credit, and the agent, a credit counseling organization will help you do that. Sometimes they can negotiate a better interest rate for you. So it's worthwhile, maybe, again, use a nonprofit credit counseling organization, not a for-profit one that will cost you more money, but go with a nonprofit organization. And again, what happens is they will help you consolidate all your credit into one loan. So you can pay off all your credit and perhaps have a loan that's lower interest rate, certainly than your credit cards. As you know, many of the credit cards are in the 20 percentile. So very expensive to have credit sitting out there. You could also think about applying for a personal loan, again, to pay off all your credit cards and have everything consolidated in one spot, so it's easier to manage. You might think about using a balance transfer credit card. So at least for a period of time, maybe 6 months to a year, they're not charging you any additional credit, which is great. The negative is if you don't pay off all of your balance within the period of time that you have the zero credit, zero interest, you will end up getting back into the same problem. Once that expires, it goes up to their credit card rate, which again is often in the 20 percentiles. You can ask friends or family members to help by loaning you money. That can be, I mean, obviously, that's great in that you're not taking out a loan or whatever. On the other hand, it can be kind of tricky if you're working with a friend or family member as far as making sure you repay it, because you don't want to ruin your relationship within your family or with your friends if you don't have an opportunity to pay it back as expected. You can also refinance your car and get cash out to pay some of your bills. Of course, that means you're going to have, you've increased the size of your auto loan, but that's an option. The other thing, if you own a home, you can take out a home equity loan, which again usually has a lower interest rate than those credit cards. So you can pay off the credit cards and have your loan in one spot at a lower rate. So that's a good thing. And also, you can look at your 401k or other retirement accounts, and oftentimes there's an option there for a loan at, again, a reasonable interest rate. So it's still going to be cheaper than your credit cards. Let me stop and see if I can. Okay. Yes, as far as receiving a copy of the presentation, you will get a copy of the slides. You will get a link to the recording. Unfortunately, I am not able to give you the name of a good credit repair company because we are not allowed to do that. But I think if you Google and then read the reviews of the various companies, and again, make sure it's a non-profit credit repair company, that would be the way to go. Okay, I filed a dispute, submitted evidence. I am unable to file a police report as in many states away from where it happened, and unable. I guess the thing that, again, if this is a different state, you probably want to try to work with a credit repair agency in the state that you're having the dispute. That's the only way I can think of that you might remedy that. So, okay, let's go on. So, to improve your score, you want to because it's going to give you a lower car payment, lower interest rates for any loan or financing opportunity. You're going to get a lower mortgage payment, better access to business credit. Again, your insurance rates are going to be lower, and you may not have to do security deposits if you have a great credit score. So again, you want to keep your balance under 30% of available credit. So if you for instance, have a credit card with an upper limit, but you're not using it, don't close it because the total of all your limits on your credit cards are the basis against which they're looking at the balance. So if you have two credit cards that have an upper limit of 5,000 and you stopped using one, just leave it sit there. So that gives you the $10,000 as opposed to the 5, and then you could use up to $3,000 rather than $1,500, and still be at the 30% limit. So again, if you're starting out and you don't have credit, you can start out with a secured credit card. And you can do that through any bank. They will give you a secured credit card. And then you want to make sure that you're paying it off as at the end of the month, that you're always meeting the time limits, etc. So that gives you, again, a beginning of a good credit history. Again, using a balance transfer for a lower interest rate is always a good thing if you pay it off. If you don't, you're going to get yourself right back into the high interest rate issue. So as I said, keep your accounts open. Practice good security. If you're using any software, make sure that you use the security and maintain a good antiviral software. And if you can, use a virtual private network, which in general you can usually set up through your settings on your computer. Always a safer way to use your online banking. Now, if you want to maintain good credit over time, you want to manage your money. So set up a budget. If you need a budget worksheet, we have one, SCORE has one, a personal budget worksheet we're happy to give you. But you want to make sure that you set aside money not only for all your fixed expenses, but to pay off your debt or put in savings. And you should be doing that. If you're 20 years old or you're 60 years old, you should still be putting money aside to save. And then you have 30% for variable spending. A lot of young people get into the problem of spending too much money for housing, buying a house that is too expensive and eats up too much of their income. And they get themselves into a difficult situation that's really hard to keep up with. So think about, before you buy something, especially major purchases, look at your budget and make sure that you have money there for debt or savings, that you have money to cover all your fixed expenses before you make that major purchase. Keep paying your bills on time. Even a few days late makes a difference. The banks and other businesses report those delinquencies to your credit agencies. So pay them on time. If you have to set a trigger, a reminder on your phone or your computer, do that, but make sure you pay your bills on time. And, if you have trouble going and checking your credit reports, sign up for credit monitoring. It's relatively minimal expense if it saves you money regarding loss, so that it does send you alerts. Sometimes they're a bit annoying, but it does keep you up to date on how your credit is being used. So the things to remember: negative items, particularly bankruptcies and foreclosures, remain on your credit report for 7 years. So that's a long time. But if everything else looks good, at least you have a rationale for working with your lenders to resolve those issues. So it takes time. Again, very important to have a personal budget and stick to it. And then educate yourself on your rights as a consumer. You have a right to know exactly what's impacting on your credit report. Again, they need to provide you with a backup to support why that's there, and gives you an opportunity to respond. So let's check. Okay. I think we've, let's see, questions. Someone used my name and that debt went to Oh. If the place and the credit bureaus know that it wasn't you, they should correct your report. You may have to contact them directly and go through a process of showing that even if they say they know, that in order to change your credit report, they need to have documentation. So make sure that you provide that. How do I get all 29 addresses? I have moved 21 times and all credit reports say they have to keep everyone on them. We have so many. You know, that it's really tough if you've moved around a lot. The reason that they give you a low score is because many times people move because of evictions, and it just doesn't look good. I'm not sure how you could have moved 29 times in, well, it depends over what period of time. I don't know that you can dispute that if you've actually lived at all of those addresses. Again, 7 years is what's going to remain on your credit report. So I can't imagine that you've moved 29 times in the last 7 years. So you might, again, address the credit bureaus with the issue that of how many times have you moved in the last 7 years, and get rid of the rest of them. So I have a line of credit and I maxed it out to pay off a bill and then paid the line of credit off within 2 weeks. And my credit report dropped my score by 2 points. No, it shouldn't. You'd probably have the same issue with your credit cards. It's basically, again, your overall credit report. And just the fact that you maxed it out is going to have an impact, even if you paid it off within 2 weeks. And 2 points is probably not a major issue. If you're talking like 20 points or 50 points, that's a major hit. But 2 points is not going to have a major impact on your ability to get credit. I'm assuming you have very good credit score anyway. So, you know, if it's 740 648 instead of 750, it's probably not going to make a difference. How do they calculate the credit score? Based on payments you make to pay off the credit cards. Again, it's the outstanding credit that makes the difference. So if you're paying on time, that's great. But what's going to make the difference is what's the percent of your total amount available are you using? So they're not actually, as long as you're paying on time, the payments that you make are not going to change your score. It's really the amount of credit you're using versus the total amount available. Is there a formula? Well, again, as I pointed out, about 35% is based on the various uses of your credit. How come I have different credit scores? They should not vary by more than a few points. So you might have a different credit score because they're using a slightly different algorithm. But if they're significantly different, you should look at each one and see if they have something in there that's incorrect, because they should be very close. So I pay everything on time and have one negative item on my credit report, but for some reason my score never changes. You know, the individual, it's hard to lower the interest rates on individual credit cards. You might, again, actually want to, if you don't want to work with a credit counseling service, you might want to consider a loan and pay off all your credit cards, because it's all virtually impossible to lower your interest rate on your credit card unless you have perhaps a major increase in your job situation where your salary has increased significantly and you can pay off your credit cards more quickly. But it's true that working with a credit counseling service does have an impact on your credit score, but it's short term, and won't make that much difference in the long term. But using them to help you consolidate your debt and, again, negotiate a lower interest rate will make up for the difference. So again, it's very difficult to lower interest rates on individual credit cards. The best approach is trying to consolidate. Let's see. I'm looking at Credit Karma and it says I'm using credit card 13%. Should I bring it? No, again, 13% is great. It's if you go over 30% that it's going to make a significant difference. So you want to, again, look at all your credit cards, your loans and everything. What's the total that's available? And keep your usage under 30%. Okay, let's see if I have 2 school loans and a car loan. Also, I'm $2,000 in collections. Again, you have to do what's best for you. But again, your options would be consolidate, pay off everything, and have a loan that has a lower interest rate than your school loans and your car loans. Or depending on what the rate is on your car loan, again, you could refinance your car and pay off your school loans. Again, if you have $2,000 in collections, the best approach would be to try to clean that up as quickly as possible. Why do you have that in collections? And what can you do to eliminate that? I mean, is it a legitimate late payment situation? I mean, I'm thinking if it's in collection, it's probably because you're disputing it in some way. But fix that first, and then either consolidate your loans or maybe use your car loan. Let me see if I have all of these. Oh, I seem to be stuck in the high end of good credit score. I have a home loan, one main credit card that I use for most purchases and leverage the benefits from that, and a backup credit card I always pay off in full. I think I'm getting dinged for going, yeah, okay. I guess what I would recommend is asking for a higher credit amount on your main credit card, or if they refuse, open another credit card so that you have a higher credit limit available. I'm thinking ideally asking for a higher credit amount would be my first recommendation. They may not give it to you because you're paying off your credit card on a monthly basis. I know that doesn't make sense, but they may say there's no value in giving you a higher credit amount. So then you might want to open another credit card, again, just to have that additional availability. If you do open another credit card, you want to use it periodically, once or twice a year, to make sure that it stays open. I have a good or excellent credit score depending on which report. However, on one of 3 reports, there's a bad debt remark of non-payment on real estate loan, which is not correct. If you're having a problem with the real estate loan, you want to talk to the loan officer at the bank that you started with. And I'm not sure exactly how they report that to the credit, but the person who handled your bank loan would be the one who could help you deal with the incorrect problem. Okay, I think I've covered all the questions. Again, if you're having problems, our score counselor can help you. But it's really important to try to get your credit history correct, get your credit score in a reasonable range. So if you're starting a business, that's going to be important. If you want to go for a loan, you need to have a decent credit score. So, your score counselor can give you some insight into things that might help you. And there might be other alternatives, such as investors, as opposed to getting a loan. So again, your situation, everybody's situation is going to be a little bit different. I know my credit age is over 8 years, but in Credit Karma says 3 years. I'm not sure where Credit Karma draws its information, but if I were you, I would go to the three, TransUnion, Equifax, and Experian, and see if there's a misrepresentative in one of those. Otherwise, you can contact, I'm not sure again how to contact them, but contact them and find out where they got the 8-year. It could be suppling a typo. Who knows? There are lots of errors that do come up randomly. And you do want to fix that if it's an issue for you. So, okay. Well, I hope that this has been helpful. Again, you'll get a copy of the slides and a link to the recording. But again, if you're having issues, I would sit down with your SCORE counselor and talk about what are your options given your very specific information. What I've been giving you is pretty general information. They can help you with more specifics. So enjoy the rest of your day.